Welcome to this episode of Business Battleground. Today we're going to take a look at the endgame for HQ Trivia, which shut down recently, and ask what are some of the lessons of that tale. Now, we're not going to gloss over everything that happened again. There's been more than enough articles that chronicled what happened. But ultimately, after the tragic passing of one of the co-founders, Colin Kroll, Russ Yusupov, the other co-founder, was inserted back in the CEO role. And the once red-hot app, which had peaked in 2017, ultimately, slowly but surely, was extinguished. The company no longer had the traction to entice investors to keep funding the money-losing venture. And lo and behold, in February of 2020, the company ceased operations. Now, in terms of disclosure, after the announcement that the company had shut down, I did reach out to the investors to see if it made sense for WatchMojo to acquire the assets, since, let's face it, WatchMojo being a producer of video content that is, that has editorial in the factual vertical and has dabbled in trivia, it would not be crazy to imagine us, being in that business. But in the end, for various reasons that I won't get into in this video, we passed. But relying on public information, I just wanted to recap what I think are the many tales, the many lessons of this tale, and they basically circle around 5 distinct areas. Number 1, product. I think the genius of HQ Trivia, and we alluded to this in the video that we produced, and we'll link to it in the comments below, was that it wasn't so much that they cracked trivia, but it's that they cracked how to scale concurrent interactive gaming. The problem was it didn't necessarily scale as well as it should have given its massive success. So you could argue that its ultimate downfall was a byproduct of its success. When you are in the tech racket, you basically do need to be number 1 or number 2 in order to win. And in fact, the technology industry has proven that if you're not number 1, you almost you don't be bothered to be number 2, because look at search, Google, look at video with YouTube, and so on. So in technology, it's largely a zero-sum game, whereas in content, you don't really need to be number 1 or even number 2, you just have to be good enough. And whereas ultimately, HQ Trivia was not the first, but one of the first to scale. They did have a little bit of a time advantage, but ultimately there was a lot of other companies that looked at their success and decided to replicate that. And that's the way, that's the modus operandi in Silicon Valley, and that's what happened. That initial lead that HQ Trivia had, combined with the lags and the technical inefficiency, ultimately provided a window for others to make up for lost time. The third subpoint in product is just this concept between innovation and disruption. As much as HQ Trivia came out, innovated, and was a disruptive force, others basically caught up. And frankly, I don't think HQ innovated fast enough to keep that flame burning hot. Fourth subpoint under product is this concept of scale versus sustainability. You've heard me say this many, many times. Things that scale overnight are generally not sustainable, and things that are sustainable don't scale overnight. When I was talking to some of the principals there at the company, trying to kind of see if there was a fit, I kind of said that like HQ Trivia was the total opposite of WatchMojo. It took us forever to scale, and that was fine with me because it basically meant we had a more sustainable business. Knock on wood. And then finally, when it comes to the product, well, no one really plays one game forever. Sure, you have these iconic franchises like Wheel of Fortune or Jeopardy that stand the test of time, but even you, I'm sure, don't watch Family's Feud the way you used to when you were much younger. So that's number 1, product. Shifting gears, financing. So number 2 is financing. It's hard to talk about HQ without discussing the impact that its financing strategy had on its endgame. The reality is, when you bring on outside investors, sure, they care about your product when they care about your people, but they really care more about just the end game, right? They basically have a basket, it's a portfolio, they put investments in a bunch of stuff. If a few of these eggs break for there to be one golden goose, so be it. The trade-off with that is that it's never good enough for investors. You could grow 10 times in a year, they want 100. You could grow 100 times, they're gonna want 1,000. So even though HQ burst out of the gates and basically went viral, you always had a sense that the growth was never enough. And it takes me back to that saying that I think Warren Buffett initially coined, and then Mark Schuster with Upfront Ventures, who was the investor in Maker Studio, said, you can't put 9 women in a room and tell them to go give birth in a month. Some things just take time, but investors lose sight of that. I don't know their investors at Lightspeed that much. I know a couple of them just through online exchanges. And Founders Fund was the other investor, was Peter Thiel's fund. No stranger to controversy. Now, I think there was a little bit of a disconnect, again, just relying on public information, between the vision and their approach. Founders Fund does not like to get rid of the founder. So I think, and we're going to talk a little bit about this in the next point, but when it comes to recognizing that maybe the heads of an organization are out of their element or they're in above their heads, I think Lightspeed maybe was, I'm guessing, was a bit more willing to bring in a different leader, whereas Founders Fund, when Colin Kroll was asked to step down, I think that's when Founders Fund said, well, we're no longer meeting our visions and what we set out to do, so we're going to take a back seat in the board, so to speak. So I'm not sure if Lightspeed and Founders Fund ultimately necessarily made sense to co-invest as the first outside money here. Fourth sub-point under financing, and this also is critical, is a lot of ink was devoted to the fact that HQ rode their success to raise $15 million at a $100 million valuation, whether that was 85 pre-money or 100 pre-money, it doesn't matter. It's a big number. But that almost becomes your Achilles heel. Bear in mind that the financing valuation has no real bearing on actual value, in my humble opinion, because it's not what somebody is paying to buy your asset. It's basically just a dynamic between demand and supply. If you are hot and you have 5 investors, somebody is gonna, like in a bull market, it's the greater fool theory, whereas in a bear market, it's a falling sword. And that's what you saw here. When they were super hot in that bull market mindset, somebody was willing to throw out a big valuation because, as the adage goes, your valuation, my terms. They ended up, I think, paying a price for that valuation. I think if they would have had a lower valuation, they would have had a bit more wiggle room, but of course, hindsight is 20/20. Moving on to the next big point, leadership and management. So we alluded to this in number 2, financing, but I wanted to talk a little bit about leadership and management in of itself. So Scott Galloway, who these days is, he's on his podcast Pivot with Kara Swisher. He's a teacher at, I believe, NYU Stern. Interestingly, he was on the board, little parentheses, he was on the board of the New York Times in 2009. That's like 11 years ago. So if you think that there's overnight success when you come under the spotlight, it's useful to note that 11 years ago, this man was on the board of the New York Times, and it took a decade for him to get the well-deserved mainstream attention that he's getting. He always has very insightful things. So Scott Galloway, who himself was an entrepreneur, had some successes and exits and some lesser successes and failures, says when you give all that money and when you have all these investors who are just nodding along and giving a blank check to a young founder, saying you are basically the next, second coming, it's not really a good idea. And I think you saw that here. I think there was one dynamic where you had whatever Colin Kroll's background was and Russ Yusupov's background was. That's an odd couple whenever you have 2 founders, because generally speaking, founders draw people that complement one another. Larry Page and Sergey Brin of Google didn't like each other when they first met. So that's one dynamic. And then I think the other dynamic in HQ Trivia was that these were 2, one was I think more of a designer, one was more of an engineer coder. So they were behind the scenes, and then you had the talent, Scott Rogowski early on, that people assumed was the guy who had started this, but Scott was just, but Scott was talent. He just didn't have the power and the decision making to be able to do anything. And I don't want to speak specifically of these individuals now, but I think human beings, there's always resentment and jealousy and envy. And I'm going to guess that it's possible that Scott's success, getting the headlines and getting the front pages, that's hard for a lot of people who start a company to be okay with. Speaking a little bit about my experience, I've alluded that I purposely did not want to launch Watch Ash or Ash Mojo. I didn't think anybody wanted to watch that. And one of the reasons why I did Context 13 years after the fact was that I was having these kinds of conversations talking about whether it's HQ Trivia or doling out my 2 cents to a younger entrepreneur. So I just thought I would kind of put it all under one place and I could just share it on a more mass market kind of approach. But I'll be honest with you that when you are behind the cameras and you see talent or colleagues get the spotlight, it takes a particular personality and temperament to be okay with that. And not knowing the individuals, but just reading what is publicly available everywhere else, I'm going to assume that not everybody was enamored with Scott's success, which partly led to him ultimately being pushed out. So the ultimate takeaway on leadership and management is also to quote something that Scott Galloway said, but this I think pretty much any sane, sentient individual will recognize is, we went through a period symbolized by John Scully being brought in by the board and asking Steve Jobs to leave Apple. He was an executive at Pepsi, and basically it was all about management, it was all about the investors having the upper hand over the founder that was this charismatic, brilliant person, but not necessarily the best professional leader. I think what you've seen now post Steve Jobs coming back, the Google, all of these companies, Facebook, if you look at the most valuable businesses out there, Amazon, Facebook, Google, and so on, they're all still run by the founder. So the 2010s will be this decade where all the power has swung from investors to the founders. I think what you're gonna see with WeWork, Uber, and HQ Trivia on a smaller scale, but these are still big businesses in terms of how much money they raise and how much money, all is relative, but that's still raising $15 million is a sizable chunk of cash. I think you're going to see the pendulum swing again to investors, where investors are going to be a bit leery of just giving free rein to these founders to do whatever that they want, which takes us to the next point. Number 4, talent. So we touched on talent under leadership and management with regards to how the CEOs and the founders, how they interacted with the talent that was on camera. But in this point, I want to focus a lot more about how to manage, how to motivate, how to be able to recognize that everybody has an ego, but if you have too much of an ego, then things can go off the rails. So in technology, the stars really are, whether you like it or not, the engineers and the programmers. It may sound stereotypical, but that profile tends to be more of an introvert. And I think if you are a CEO, if you are a VP, you have to be able to communicate and motivate a profile that gets huge salaries. They command a lot of perks when they join a company, but ultimately they don't necessarily communicate the way that you want to communicate, so you have to adapt. And there's no real two-way around it. Google, all these big successful tech companies, it's really an engineering culture first and foremost. Way back, my sister used to work at Cirque du Soleil briefly, and she worked in the finance department under the CFO. I mean, that's a very creative environment, so you can imagine where the kind of attention is devoted to. And so similarly, if you shift gears now and you talk about an organization, whether it's WatchMojo, but especially an organization like HQ, which had one face when it launched and it had its heyday, that was the face of the brand. So I think when you are dealing with talent, you do need to kind of be okay with that as a CEO, that it's not just like that you have to be okay with it, but that's almost the objective. Your objective is to spot talent who's comfortable, who's got that charisma, who's got that comfort and confidence to be in front of a camera, and then it's to give them all the resources and all of the kind of mental conditioning and preparation and coaching so that they're comfortable to go out there. And I mean, on YouTube, it's a little bit different because then everybody in the comments starts to kind of nitpick on all these small things. But again, I think going back to the HQ example, that was just something that was friction from the get-go, because my guess is that not everybody was happy with Scott's success and all the accolades that he got. And I think when Scott was basically pushed out because he was doing he was a fan of baseball, so he got a MLB Network gig on DAZN. I think that was the straw that broke the camel's back, but I don't think it was that specifically. I think eventually Scott's success was just something that had kind of given him a kind of past due date that eventually he would have had to leave. Now, again, just citing what was said on on Twitter, Scott came out and basically said, and I quote, "HQ didn't die of natural causes. It was poisoned with a lethal cocktail of incompetence, arrogance, short-sightedness, and sociopathic delusion. Saddened to see it finally succumb, sadder still for the good and talented staff abruptly left in the lurch after being gaslit and lied to." End quote. Alrighty then, shall we read between the lines? Yeah, I guess there's no need to read between the lines. So look, I'm gonna actually do our founders and CEOs sociopaths segment with Rebecca on Context is King, because I think it's interesting to dive into that a little bit more. So all I will say is that not knowing the characters specifically, it's hard to understand what entrepreneurs and founders go through. That's why I like the "In the Arena" quote by Teddy Roosevelt, given in, I believe, 1910 or 1911 in Paris. But I also think that not everybody is wired to be the CEO. And even if you start a business, I don't think that necessarily gives you carte blanche to run it over time as it grows. And I think the specificity of HQ being so associated with one face may have been its undoing, because a lot of people will point to not necessarily Colin Crowell's tragic passing when he succumbed to an overdose, although that was probably a bigger impact over time. But I think realistically, when Scott left, I think it became very hard that whomever that they brought in was almost on the defensive to try to kind of like show that nothing had changed. That was 4, talent. Number 5, strategy and execution. So when it comes to HQ Trivia, it's hard to really break down, well, what was the strategy, what was the execution? And as much as those things are actually very different, in this case, we're going to bundle them together. I think one of the geniuses of HQ Trivia was not just its simplicity, but that, of course, you had the opportunity to play for free, but win cash. I think that's something that if you then go, it helps you grow much faster. But then 2, once you start to grow, you could actually make that the headline. You could go on Kimmel, you could go on Fallon, you could go on Good Morning America and say, yeah, look, the selling point's pretty obvious. It's not just 10 questions that you answer, it's that you get to play for free and win cash. I think that's great, but then the problem with that is that you do get a lot of people who then game the system and who just show up for the money. Money's important, but what's actually more important online with long-term sustainable successes, not the quick scalable successes, is the community angle. So I think a huge missed opportunity for HQ Trivia was that it never really branched out as it got really, really big, meaning that $1,000 or $10,000 pool was now being divvied up by millions of people, meaning the winner got 4 cents, but that I think it could have offset some of that reduced pot by branching out into communities. Imagine if you could play with your friends. Imagine if you could play with your colleagues, your family, or people that also cared about the shows and the artists and the movies and the TV shows that you liked. That would have been really, really smart. And for reasons that I still don't quite understand to this day, they never did that. And then finally, another thing that kind of behooves me is the web is global. And as much as I understand why people focus on the US because the advertising market is more lucrative, I'm still a bit baffled by the fact that HQ did not branch out internationally. Sure, English is the lingua franca around the world, but it's weird because there's a lot of people that don't speak English, and I feel that could have probably helped them grow much, much faster. So to wrap it up, I think HQ Trivia will go down as one of the iconic brands of the 2010s. I also think while obviously the company let go 25 employees, my guess is that somebody will buy the assets, and whomever that is will find something to do with the brand, the technology, that installed user base, and you'll see it come back to life. Whether or not it comes back to life and is a huge success is hard, because in tech, and ultimately as much as you could argue this was a content play, it was a bit more of a tech. In tech, it's hard to have second acts that are as successful as the first. Just look at MySpace. MySpace lost its mojo to Facebook and YouTube. And even though it had a number of buyers after the fact, it never quite got back its mojo.